Mayuresh Joshi of Angel Broking is also joining into our conversation. Mayuresh, hi, afternoon. I wanted your thoughts on some of these stocks that have, moved to new highs today, whether it's names like M&M, Pidilite, Avenue Supermarts, etc. Anything that tops your investment list now? Anything you're looking to buy?
Afternoon, Sonia. Now, all these stocks have very strong moats around them. Now, if you look at M&M, for example, the kind of volume growth that they have delivered, specifically in the farm equipment business, the expectations largely are 8-10% growth on the tractor side of the business. Even on the UV side of the business, the management is very, very hopeful of delivering mid-teen growth. So with 3 UV models expected to come through in a modified version, you're probably looking at sustainability on the volume growth front on the UV side of the business as well. In terms of their investments in subsidiaries, the investments are probably reaping huge benefits. So what they probably get both in terms of dividends from subsidiaries and the overall SOTP valuations, including subsidiaries, I think that holds up in good stead for M&M. So I think the whole recommendation clearly remains on M&M as a stock. For the other stock that you mentioned, Sonia, I think Pidilite, again, very strong moat around its business. And what they have delivered over the past 5 to 6 years on both their business segment growth, whether it's industrials or their bazaar segment, I think that growth probably sustains itself. So largely, I think revenue growth should sustain anywhere between 12 to 15% over the next few years. With increase in raw material prices, I think the pass-through component, because of the moats and the brands that they've created around itself, should probably sustain as well. So sustaining EBITDA margins should give it the necessary operating leverage as well. So I think they're good run, well-managed companies, creating reasonable amount of leverage on their balance sheet and earnings growth expansion. So yes, I think the positive view probably remains on these stocks and clear hold recommendations on all of them.
Okay, just pull out the intraday chart of Century Textiles. Mayuresh, your thoughts on the stocks, Interglobe in particular?
No, so absolutely, you guys are right. I think let it actually come through. But if it does come through in the form Tim C was mentioning, obviously it's a huge positive. The second element also is the cost per available seat kilometer ex fuel. I think that is also getting optimized by a lot of these airline operators, and obviously that impacts their yields in a positive manner. In terms of the ATF prices and crude prices, which have moved up significantly in the last few weeks, I think the yield compression was very, very evident, as seen from numbers both for Jet and Indigo, and that was also a clear indication in terms of their EBITDA margins actually compressing. But to a large extent, again, I think the realizations in terms of ticket prices have started moving up. The load factors are significantly higher. You're probably looking at regional rates. And again, I think the RASK factor, which is the revenue per available seat kilometers itself, is showing an improving trend. So I think the yields, ex-CASK, should probably improve significantly. And CASK, again, I think ex-fuel, I think that has shown significant improvement. If this is probably brought into the ambit, even the cost per available seat kilometer, including fuel, will have an improved show. And that will probably have an improved bearing in terms of the reported yields. So largely, I think the aviation stocks, if this happens, I think should move positively and everything should start improving if it gets approved and implemented. But again, I think from a bottom-up approach, my own sense is that SpiceJet is something that I'll continue liking.
Okay, Mayuresh, thanks a lot for your time today. Let's do one thing, we'll take a break.